Reuters breaking views headlines this morning after a fourth quarter restructuring hit at Credit Suisse. The payback still depends on business picking up this year. Rio Tinto is brave to open what it calls a dividend gusher, and Iranian oil for rupees poses a diplomatic dilemma. It's a complicated story, that one. Chris Hughes is here to explain it. Chris, let's kick off with Credit Suisse. Q4, Brady Dugan has said it was disappointing. The question is, will Q1 look as bad?
Well, they're saying that actually, there's a very different note from Credit Suisse compared to UBS. They're saying that it's not as bad as UBS is saying the first quarter is. Remember, only a few days ago, we had UBS sort of were practically writing off the year before it even begun. But the loss in the fourth quarter, I think that is surprising. The first loss on a quarterly basis since 2008 from Credit Suisse. Credit Suisse seen as sort of financial crisis relative winner. And what it shows is that they really have been, there's weak markets involved, but also they really have been running hard on cutting costs and therefore
and hence this billion Swiss franc charge.
Yeah, and reducing risk-weighted assets. So they really are taking the pain up front on realigning their business.
But hasn't Brady Dugan set himself up though? He's talking about clearing the decks so that they can move forward with momentum. Q1 better be good. Q2 better be good.
Well, the question is, when does the momentum pick up? Because what you're seeing with Credit Suisse is a bank which is, on the front foot in terms of adjusting its business, getting real about future returns on equity, and adjusting the cost base so that they can generate acceptable returns. But the problem is, you take that pain now, when do you actually see the returns coming through? Credit Suisse is confident that they can make 50% return on equity this year, but it looks to us that they still need markets to be performing a lot better than they are now to get there.
Okay, 34% dividend hike at Rio Tinto. You're impressed with this?
Well, ish. Their payout ratio is still lower than BHP's. They've always said they were going to review the dividend policy in February, so they're essentially changing the shift from buybacks back to dividends, and right now it looks like they do have headroom to do it. They generate billions of dollars of cash, but the thing is they've actually got a lot to spend it on. They've got increasing capex needs. I think it's about 12 billion in 2011. That's going to go up, and the cost pressures are rising in the business. Now look, if you continue to have this amazing commodities super cycle just generating all these profits and cash, then that's fine. They can afford to raise the dividend and hand it back to shareholders.
Okay.
But if the super cycle turns and they're left with these capex commitments and still cost inflation, then there isn't actually much flex. So it is affordable for now, but you do wonder whether maybe just keeping up the emphasis on buybacks for a bit longer might have been a bit more prudent.
Okay, I want to finish up with this story I called complicated. I guess complicated in a minute and a half. This deals with India and Iran, and this deal to pay for India to pay for Iranian oil. Just quickly explain what it is.
Well, look, previously India paid for its Iranian oil in dollars. And the agreement now is that Iran will take payment in rupees. Now the question is, rupees, what are they going to do with them? The options, really threefold. They can just keep it on deposit in India and earn a 4% return, or they could start increasing Indian imports, but that clearly isn't going to go down too well in Washington if it's seen as somehow sort of evading the effect of sanctions. Or they could put it into the Indian stock market.
Yeah, but this idea, and you raise it here, or Jeff raises it, India could become a trading hub for third countries to sell to Iran. That's not going to go down well with the US, right?
No, it's a very tricky situation because you can see what's in it for India financially if this money is invested back into Indian assets or Indian goods, but there's going to be a diplomatic cost to it. But it's a very interesting situation.
Okay, and you can read that story, of course, on the Breakingviews site. Chris, many thanks for that. Chris Hughes, if you want to watch the US show, in fact, let me, before that, if you want to see the interview with Brady Dugan and why he deserves a bonus, you can tune in onto the Insider platform for that. If you want to watch the US Breaking Views show, it's at 12:30 Eastern, 17:30 GMT every day. I'm Axel Threlfall. This is Reuters.